Hey guys, Joseph Henson here with Henson CPA Group. We're going to kind of go through things that you need to start looking at for year end. We're going to call this the financial reset, cleaning up your books before January 1st. Again, I'm Joseph Henson, CPA with Henson CPA Group. I appreciate you joining me today and every week, just like you have been. If you have any questions at the end, feel free to reach out, but we will go ahead and get started. Why a year-end cleanup matters. December determines how smooth or painful tax season will be. If you have not began cleaning your books, it will lead to inaccurate taxes, fewer or more surprises, and less financial decisions being able to be made. You want those clean books. You want the accurate taxes. You want fewer surprises at year end, and you want to be able to make better financial decisions for the new year. Vet clinics often carry mistakes forward for years without even realizing it. You might be short in your account because of an old payable on your books or an old receivable, and this is causing a timing difference that you've never even known was there. You may have some items on your balance sheet that have stopped you from truly moving forward in a clean, healthy spot. So the goal should be start the new year with clarity instead of chaos. The year-end cleanup checklist. By December 31st, your clinic should wrap up some essential items. 1, reconcile bank accounts, credit cards, and loan balances. 2, catch up and classify all uncategorized transactions. This is going to be typically in your income statement. You have a category called uncategorized transactions. What is that? No one knows. It's a black hole for things that you just don't really want to look at the time. 3, ensure all client payments and deposits are recorded correctly. We want to make sure that any payments from clients aren't unassociated with an actual invoice that's been built. And then with that, your deposits have been clearing as they're supposed to. 4, verify payroll and contractor expenses are complete. Are you an accrual basis clinic? Do you need to accrue a little bit of payroll for year end? Are your contractors up to date with their W-9s? Do you have their updated address? Let's get that stuff cleaned up now. So come January, everything goes out very easily and smoothly. 5, review accounts receivable for any uncollectible balances. I've worked with clinics that have had items on their books for years as a receivable, and they don't want to write it off for one reason or another. They may come in, this might happen. At some point, you need to just write that off. It is no longer going to be able to be collected on. You've just lost that revenue. The most common errors that we see in veterinary clinics are going to be typically these 5. Revenue recorded twice because you have built a deposit, but you're not matching that deposit to the actual bank feed. So you have built a deposit, said, hey, this was my professional services, this was my revenue from my pharmacy, this was surgical revenue. You put that in, your bookkeeper put that in, but what they didn't do was match that to the bank feed. So then when it came in, they put it all into sales. Expenses missing or miscategorized. If you're not reconciling your books, you'd be surprised how often we see this. You probably have missing expenses, or even other times you have miscategorized expenses. You got an office expense that you would put into meals. Well, now you've lost 50% of that deduction. You have a fixed asset for maintenance, but truly it should have been on your balance sheet because we can take a depreciation on that. It hits those limits and you have to know that. Inventory purchases hitting cost of goods sold incorrectly. There are 2 ways that this can be handled. 1, you do a true up period at year end. You know how much inventory is on hand at year end, and we just do a true up. Or 2, you put everything to cost or to a inventory asset account. And you, as you are doing this throughout the year, have items coming out of inventory. The next one, old balances hanging out in accounts receivable or accounts payable from years ago. A lot of these have probably been received or paid. If you were owed money or if you owe someone money, these have probably been taken care of. Doesn't mean they were handled correctly, and we need to get that cleaned up. Then loan payments fully coded as expense instead of principal and interest. If you've watched my other videos in the past, you're going to hear me talk about the difference between the income statement, the balance sheet, how the cash flow works in, all of the good things that we love to talk about that sometimes veterinary clinic owners just, they don't enjoy. And when it comes to loan payments, what we have seen is many people just say, hey, this is all on the income statement. This is all an expense. We paid $500. It's all an expense. You have a payable on your books on the balance sheet, and you have your income statement over here. You're taking all this on. You're not recognizing what should have reduced that liability, but you have been recognizing the full expense, which means you're overstating your income, or you're overstating your expenses, understating your income, which can cause a major issue down the road. What we need to do is join those up. How much of this $500 should have been on the balance sheet? How much should have been on the income statement? Do we have a true up? Do we need to claim some income from previous years that we didn't? That's one of the things that is very common. We see it go both ways. We've seen it where everything goes to the balance sheet and nothing is ever actually hitting interest expense. So you have overstated income, and we've seen it all hit the income statement and never hit the balance sheet. So you're understating income. Both are common, both happen, but now is the time to get that fixed. Reconciling accounts, the non-negotiable step. Reconciliations ensures your books match the bank. No exceptions. This is a hard stop. You must reconcile your accounts, not quarterly, not semi-annually, not annually, monthly. Your accounts should be reconciled monthly, and every account should show zero discrepancies before year-end closes. The number of times we come in and see a reconciliation discrepancy on the income statement is astronomical. Well, the bank didn't balance, so we had to just make an adjustment. No. We have an issue here, my guys. We want to have your books be clean. And then vet clinics often skip reconciling loans and credit cards, which leads to incorrect profits. If you are not reconciling your loans and saying at year end, we should have had a $7,000 on the principal balance, but we're at $4,000. You've done something. What have you done? You put all of your payments to the principal, none of it to interest. We got to fix that. If this step is wrong, your entire financial statement is wrong. That is a hard stop. There is no exception to that. If your books are not reconciled for the balance sheet, your income statement is wrong. Your tax filings will be wrong. That's not to say it can't be fixed. Reviewing your profit and loss, your P&L, your income statement for accuracy. Look for major swings or odd categories. If you look at your books and you see a reconciliation discrepancy, that should be sending off like sparks of light. That should be a red flag. Stop here. You need to fix that. If you have uncategorized income and uncategorized expenses, ask my accountant. Fix those quarterly, monthly, daily. Scan for unusual spikes or dips. If your income all of a sudden dropped 30%, why did it drop? If you notice that your insurance raised 700% this year, why? Did you have something weird happen? Did your premium just raise that much? Expenses sitting in the wrong bucket. I'm not saying do a full-blown audit, but look for that unusual spike or dip and see if you can see what's missing in there. And then owner draws showing as expenses. If you're the owner of your clinic, which you probably are, or that is your goal, and you're taking draws from the business that are not related to payroll, unless these are guaranteed payments in a partnership, which is not very common, you need to put this on the balance sheet. We need to make sure this is being handled correctly because you don't get to deduct those. You don't get that luxury. You pay tax on that whole $100. And then a clean profit and loss statement helps you set smarter 2025 targets, 2026 targets, 2027 targets. This lets you look at the backwards and go forward. The balance sheet is your clean slate. It is often ignored, but it is your truth of the business. You need loan accuracy because how else are you going to know what your current ratio is? Your assets must be correct. Did you take a de minimis deduction? Did you record the right assets on the books? Do you have current receivables? Do you have current payables? You need to know that. Your cash accounts. This is going to be for your daily cash drawer, your bank account, your savings account, a CD potentially. This is all needs to be reconciled. And then unpaid bills. Look at your payable accounts and make sure that these are being paid. You're not getting penalties for not. Clinic owners, if your balance sheet is wrong, nothing else matters. Nothing else is right. The income statement can be wrong and flow through and you'll never know. But if your balance sheet is off, it is the easiest one to audit and tell. You have all the documents. You can say, here is my beginning balance. Here is my ending balance. Where are we at now? Make sure all balances reflect reality on December 31st. Not just this year, not just last year, every year in perpetuity, unless you close your business. So before and after clean books, before a cleanup, you can have incorrect balances. You can have missing expenses. You can have outdated accounts receivable. After that, now we know you have accurate accounts, you have updated numbers, and you have clean financials. You can make decisions that are actually financially driven, not just gut feelings. You can use your gut on some of this, but your financials are going to let you know how well you're doing. What to review before closing the year. Ensure all inventory purchases and adjustments are recorded. 12/31 hits, you're taking inventory, so we know what adjustments need to hit. Did you have more inventory on hand than you thought you did or less inventory on hand? Let's make that adjustment. Double check fixed asset purchases for depreciation planning. Are you taking bonus depreciation, matrix depreciation, straight line depreciation, Section 179 depreciation? A lot of these buzzwords you hear folks talking about, they don't want to explain to you, but let's go ahead and make sure we're doing it correctly. If $20, get it there. You want to miss $20 less, get it on the balance. You need to look at updating your mileage, office, and adjustment. You have a business vehicle. You can take mileage or actual cost. Let's sure you have your beginning mileage for the year, your ending mileage. You have a home office that you for business. Let's make sure you have the correct footage. No expenses from that. And there's other year adjustments that need to be made, but we don't all know what those are until you're about. You want to review open invoices, vendors, close out anything inaccurate. Anything inaccurate. Not Farmer Joe that come some Hill Square. Farmer Joe hasn't been a farmer in the last 5 years. He's not coming to pay it down. Make it another way. Probably prepare for January by organizing financial documents now. I want to send your statement to make sure you've done this right. I want to see your statement or credit agreement, loan statements. Let's make sure you have correct. Let clean your book before you prepare your tax season. We can guide you on this. It's smooth and we can get a strategy process. We're going to do what we need when we need it. That way, we get you on the road foot for 1/26, 1/27, wherever you're watching that. Here's our address, website, and Joseph PA book year financial review. Let's link it in the comments. If you guys have any questions, I'm hearing from you. Feel free to reach out. Until